let's talk a little bit about budgeting. So in the very basic form, what is budgeting? I think what you should do is to break down your expenses into what's a fixed expense and what's a variable expense. We all as business owners will have a lot of fixed expenses. To give you some examples, that could be a place that you rent, warehouse, etc. And then you have variable expenses, which we also refer to as running expenses. Once you break your expenses down into these two main categories, you can really think about what is necessary to run the business and where you can kind of cut costs to increase cash flow. For example, in variable expenses, you can have things like utilities. You can have things like, if you're a supplier, you can have things like stocking costs, right? And you can work to decrease those costs. For example, if you know that you're spending too much on stocking, you can work with your clients to say, whenever you buy a product from us, we are going to ship it to you right away, so we don't hold it at our warehouse for too long. Once you've broken down these expenses into their categories, you can see where you can cut costs and where you can increase cash flows. I think to start off with, you don't necessarily need to buy a software for bookkeeping or accounting, but I think it really is helpful because what the softwares do is they can combine all the information that you put in and give you a lot of spreadsheets of information like your financial statement, your balance sheet, and you can really look at those things to see where you're standing economically, things where you can do better. And that's something that you can't do if you just create an Excel sheet yourself. There's a lot of work that goes into that. So it may be beneficial for you to buy a software right away, but it depends on how much cash flow your company has and whether you can understand those financial statements, balance sheets, and information that the softwares give you. So I think in terms of budgeting, you should be looking at or updating it every month. The way we do it at Finlogical is, for instance, month end, whenever you pay your credit card bills or you have your big expenses going out, you close them and then you go into your software, or if you do Excel accounting, you go in and you close the month. So you put all your expenses, all your revenues at the end of the month. This helps you keep, updated and gives you an idea of how you're doing as the year progresses. If you do the accounting every month, it won't accumulate on you, so you don't have that much pressure at the end of the year to close everything, to file your taxes, for instance. So in terms of accounting for your expenses, you wouldn't do an average. You would just, as I've said before, when you do your month end, you take whatever the expense was and put it down. At the end of the year, however, you can bring out averages using the information, using the expenses that you've had over the year, just so you have a better understanding of how much you're spending on different expenses like utilities, for instance, or rent, right? But when you do account for them, you have to do it based on what it is that you paid or what it is that you owe. So talking about the budget that you set for the year, if you're looking to estimate how much you're going to spend, how much cash flow you're going to have over the next year, the best way to really do that is to look at your last year's operations and see how much you spent on those different expense items. For example, utilities, rent, etc. These things are bound to go up and down, but when you look at your prior year expenses, you can kind of get an idea of how much you may have to pay over this upcoming year. So income is a little bit trickier depending on the type of business. If you're in a business that's relatively stable over the years, you can kind of estimate how much you're going to earn. But if you're in a business that's more volatile based on services and contracts, you can't really estimate how much you're going to earn over the years, because it comes down to whether you maintain your contracts or whether you get new contracts and whether you get new sources of income.